Hey, Jim? Jim?
Yep.
I assume if I've got a couple of the reader questions with me, I can just, if one of us uses one, the other one won't, I guess, right?
Yeah, I'm making notes as to what we ask along the way. So yeah, I've got, I'm sure the same ones you've got and some of my own, and I know you've got some of your own. So just
Sure.
marking them off as we go.
Yeah, okay.
Also, FYI, it does look like we are now live on Facebook for everyone's situational awareness.
A useful comment.
Good evening and welcome to this live virtual forum with WMAY and the State Journal Register on the proposed amendment to the Illinois Constitution that would allow the state to adopt a graduated income tax structure. I'm Jim Leach with WMAY Radio in Springfield. I'm pleased to introduce the executive editor of the State Journal Register, Lisa Richardson.
Good evening and welcome to our forum on the Illinois graduated income tax proposal. Thank you to our radio audience and our Facebook audience and our Zoom audience for joining us and our guests for participating. My State Journal Register colleagues and I are happy to co-host this forum with WMAY because we have the same mission. We have the same journalistic mission to educate you, the voter, on how to exercise your right to vote, provide fact-based, balanced coverage of candidates and issues, and give you a place to exchange viewpoints. You turn to us for unbiased coverage, and we will always protect that trust. It is a role we proudly embrace. So tonight, watch, listen, and then go to the polls confident in the choice you make. Now, Jim and Bernie, let's get started.
Thank you, Lisa. Our participants for the forum are representing supporters of the amendment, Jake Lewis with Vote Yes for Fairness, and for the opponents, Andrew Nelms with the Coalition to Stop the Proposed Tax Hike Amendment. We'll begin with opening statements, the order of which was determined before the start of the broadcast by a coin toss. So with a 2-minute opening statement for the proponents, here's Jake Lewis.
Thank you, Jim. And I want to first thank the State Journal Register and WMAY for inviting me to be here today. My name is Jake Lewis. I'm here on behalf of Vote Yes for Fair Tax, which is a coalition of organizations that has been working for many years to pass a fair tax here in Illinois. And I want to start out tonight by saying something that I hope everybody who's watching and listening, and perhaps even my opponent on the other side, can agree with, which is that the tax system in this state is simply unfair. The middle class, the working poor, pay way too high of taxes in the state, and folks at the very, very top do not pay their fair share. And that's not just a feeling that people have, that's backed up by evidence. Illinois has the 8th most regressive or unfair tax system in the nation. And if you look at all of the state and local taxes paid by residents of Illinois, those at the very top, the top 1% of earners, pay half the tax rate as a share of their income as the bottom 20%. That's unfair, that's wrong, and it needs to change. And the fair tax and fair tax reform will change that. So with fair tax reform, 97% of Illinoisans will get a tax cut. That is everyone making less than $250,000 a year. And yes, that includes small businesses who make less than $250,000 a year in profits. They'll see a tax cut. And yes, that includes farmers who make less than $250,000 a year. They'll receive a tax cut as well. And in addition to the tax cut, fair tax reform will raise more than $3 billion that we can invest in our state that we desperately need right now in things like healthcare, education, infrastructure, jobs, and so on and so forth. Again, I'm very excited to be here tonight to speak with everybody and to talk more about the fair tax, but what I'm not going to do is engage in scare tactics. We're going to talk about the facts of the situation. We're going to talk about what the amendment does and what the legislature has done, but we're not going to talk about hypothetical future situations. We're not going to use words like could open the door to or could lead to, because those are simply distractions.
Jake Lewis, thank you very much for that opening statement. Now for an opposing point of view with a 2-minute opening statement from the opponents of this amendment, Andrew Nelms.
Thank you, and it's wonderful to be with you and your viewers and listeners through the marvels of modern technology. Now, we voters are being asked to make an incredibly consequential decision. We voters are being asked whether or not to radically expand the taxing powers of state government. Illinois suffers from 2 chronic, persistent ailments: fiscal mismanagement and corruption. Make no mistake about it, there is nothing fair about giving Springfield politicians more tax power, especially when we consider how we as taxpayers have been treated by our politicians in the past. Now, a report prepared by Moody's Analytics at the request of the state, released earlier this year, put it this way, quote, "The vibrant national economy is enticing more of the state's residents to seek opportunities elsewhere. The main reason for the worsening trend is a loss of domestic residents or people moving from Illinois to other parts of the United States. In the past few years, the gap has widened as an underperforming Illinois economy has reduced the state's appeal compared with the rest of the country," end quote. Now, we have the largest pension problem and the lowest credit rating in the nation. We have the highest tax burden, among the highest property taxes, now the 3rd highest gasoline tax, and we've been dealt 2 massive income tax hikes in the past decade. It's no wonder why we've been dubbed, quote, the worst state to be a taxpayer. As I always say, we're at the top of every list we ought to be at the bottom of, and we're at the bottom of every list we ought to be at top. But it shouldn't be this way. By all rights, Illinois ought to be one of the most prosperous states in the union if it weren't for bad public policy. We have 36 Fortune 500 companies headquartered here. And at the same time, 75% of the state is covered by farmland, and our industrious farmers feed the world. We should be the economic engine of the Midwest, but instead we remain the laughingstock of the nation. accepting the promise of initially paying, quote, the same or less, in exchange for handing the legislature a blank check with the likelihood of
2
higher
minutes
taxes.
is up. I'm sorry about that. Thank you. But we'll be getting to all of these points throughout the course of the evening. So thank you both for those opening statements. Tonight's forum is not a debate per se. We will not be timing the answers that our participants give. We will allow each a chance to answer each question and to respond to one another. The media panel reserves the right to ask follow-up questions for clarity. We'll be offering our own questions and those submitted in advance by listeners and readers. While it goes without saying, we of course encourage our panelists to speak one at a time and to explain their points in detail without filibustering. With that, let's get to the questioning, and we go to my colleague and friend, Bernard Schoenburg, political writer and columnist for the State Journal Register.
Good evening, all. Nice to see you. Based on endorsements, it appears that business groups generally don't like the amendment. Labor groups like it. Is this a business versus labor issue? And Jim, I don't know who to go to first. Do we go in reverse order and go to?
We'll let anyone just jump in, whoever would like to start.
I'd be happy to answer that question, Bernie. This isn't a business versus labor issue. This is an issue of 97% of Illinoisans who will receive a tax cut versus the top 3% of Illinoisans who will have to pay a little bit more. And if you look at the way that the endorsements have broken down here, you'll see that it's not just labor groups that support the fair tax, it's community organizations, it's advocacy groups, it's groups that have been working on state policy for many, many years. And if you look at the organizations that oppose the fair tax, you'll see organizations like Andrews, which is Americans for Prosperity, which is funded and founded by the Koch brothers. You'll see a coalition of business organizations that's being funded primarily by billionaire Ken Griffin. And you'll see really the wealthiest in the state trying to keep their own sweet deal. And they're doing so really by throwing out distractions and diversions from the reality of the situation, which is that our tax system is broken and it needs to be more fair for working people. And that's exactly what fair tax reform would do.
Well, and Bernie, I'd mention that I wouldn't necessarily consider the Illinois Farm Bureau a business group, but then at the same time, NFIB, the voice of small business, is concerned about this because small businesses are the lifeblood of the Illinois economy, and this would negatively affect over 100,000 small businesses just to start. And we've already talked about, Jake mentioned the unfairness in the tax system, but the income tax itself, people might be surprised to know there's already quite a bit of progressivity in the state income tax. In fact, the lowest 20% of taxpayers pay just 1.5% of their income in state income tax. And this is something that our former Lieutenant Governor, Paul Vallis, mentioned recently, that there's no need to change the Constitution to make the state income tax fair, can be done through tax credits. And that's something that is built into the legislation that was passed. In fact, for a family of four earning $61,000, according to the governor's office's own handouts, would receive a mere $41 in state income tax breaks. And so accepting a couple of dozen bucks in exchange for handing the legislature greater latitude to levy higher taxes, to me, seems like a bad deal for the middle class.
I think Paul Vallis tried to get to be one of our statewide elected officials.
Correct. Can I just respond briefly to that? Because I think Andrew brings up a couple of good points. First, he mentioned the Illinois Farm Bureau. I think it was very telling when the Illinois Farm Bureau came out against the fair tax. The head of the Illinois Farm Bureau was asked, well, wouldn't this impact your taxes personally? And he first said no, but when presented with the truth, which is that he makes more than $300,000 a year, he did in fact say that this would impact him as well. So I think a lot of these organizations are headed by very wealthy people who simply want to keep their own sweet deal here. Bernie, you mentioned Paul Vallis. Again, I think Paul Vallis was last seen coming in last in the Chicago mayoral election. I'm not sure if he is considered to be an expert on state policy, but I think the important thing to remember here is that working people will get a tax cut under this plan, and that the wealthiest, the top 3%, will have to pay a little bit more, but frankly, they can afford it. And by paying that small amount on income above $250,000 a year, we will raise $3 billion that this state desperately needs to invest in education and healthcare and shared priorities.
On the notion of the amount of revenue raised, proponents have questioned whether or not in a post-COVID world, this rate schedule would still generate the $3.4 billion that it was ostensibly supposed to raise prior to that. But it's also important to note that these initial introductory rates don't have any guarantee that they'll remain in effect for any amount of time. In fact, one lawmaker, while this was being debated in the legislature, stated outright that he did not think these rates were high enough. And some of the organizations promoting this amendment have in the past, they themselves put forth rate schedules that would have raised taxes on people earning far less than $250,000 a year, which to me suggests that there is already an appetite for higher taxes and higher tax rates. Because once the legislature has the ability to do this, they at any time, with a simple majority vote, could tinker with the rates, add additional brackets, increase the rates, and reduce the threshold at which higher rates apply. In fact, the way this very issue unfolded illustrates that point. Between the time the governor introduced his rate schedule and the time the legislature passed it, they increased the rates and they reduced the threshold at which higher rates apply. And so there's no reason to believe that that pattern isn't going to continue and affect the middle class.
We'll come back to the rate question in the course of the hour here. I want to jump to an issue that has become one of the dominant issues in this discussion, and it has to do, of course, with retirement income. And Andrew, I'd like to start with you. Does anything in this proposed amendment explicitly authorize taxing of retirement income, and how would a graduated income tax make it easier to eventually tax retirement income? Andrew, if you'd start, please.
Yes, happy to. And I want to be very clear and fair about this. The legislature could now tax retirement income if it so choose. It wisely has opted not to. We are one of the few states that does not tax retirement income. But the short answer is no, the amendment does not explicitly authorize a tax on retirement income, but it makes it easier. And all we need to do is look at the actual language of the amendment. Currently, Article 9, Section 3 of the Illinois Constitution, which deals with revenue, states very simply that a tax on or measured by income shall be at a non-graduated rate, full stop. The amendment, as it was adopted, would allow the legislature to provide, quote, provide by law for the rate or rates of any tax on or measured by income imposed by the state, the rate or rates of any tax on income. And so now the legislature could authorize one rate or rates for regular income and a separate second, presumably lower rate or rates on retirement income, which is why this amendment would absolutely make it easier for politicians to tax retirement income. And it's also worth noting that high-level individuals within the governor's administration have in the past supported taxing retirement income. And also our state treasurer, Michael Frericks, made what I think he later thought to be an unfortunate comment when he said, quote, one thing a progressive tax would do is make clear you can have graduated rates when, not if, when you are taxing retirement income.
Jake?
Well, I think Andrew said it outright right there. The amendment does not tax retirement income, and that is absolutely true. And frankly, any idea that it may make it easier to tax retirement income is actually the opposite of the truth. If the fair tax does not pass, legislators are more likely to find other places to raise the revenue that we desperately need. And one place that they could potentially look is retirement income. That is to say, the fair tax strengthens and protects retirement income for Illinoisans who have worked many years and earned what they need in order to survive. So this unfortunately is one of these distractions that we've seen a lot of over the course of this campaign, which frankly has nothing to do with the fair tax itself. It has everything to do with trying to scare, distract, confuse voters, especially seniors who are concerned about their own retirement income. But let's be clear about who has said that they support taxing retirement. You know, sometimes in Springfield, you hear the numbers thrown out 60, 30, and 1. That is to say, in order for a bill to pass, you need 60 members of the House of Representatives, you need 30 members of the Senate, and you need the governor. Here we have 60, 31, and 0. That is to say that not one of the members of the General Assembly nor the governor have said they have any interest in taxing retirement income if the fair tax passes. So there isn't a single person who passes legislation or signs it in Springfield who has any interest in taxing retirement income. And that really tells you what you need to know about this situation, which is that instead of paying their fair share, a few pennies more on the dollar over $250,000 a year, the wealthiest in the state have decided to divert and confuse and distract. And they've brought up this retirement issue, which is just not true in the slightest.
Well, and I think that, of course, if people were thinking about it, they wouldn't say it out loud. You know, you saw all the flack that the treasurer caught for mentioning it, even as a hypothetical. But I also think that taxpayers can be forgiven for being skeptical of the promises and assurances that have been made to them and that are being made to them by Illinois politicians. I mentioned earlier, I think one of the important questions that we as voters ought to ask ourselves is, how have we been treated as taxpayers by our politicians in the past? I'd remind the listeners and the viewers that in 2011, when the legislature passed the so-called temporary income tax, they did so in the middle of the night on the last day of a lame duck session. In fact, 20% of the votes for that tax hike came from lawmakers who had been defeated or who were retiring and who were no longer accountable to the voters. Fast forward to 2017, when instead of allowing the so-called temporary income tax to continue to drop as we were promised, our politicians instead broke that promise and increased the income tax permanently over the Independence Day weekend, as most Illinoisans were enjoying backyard barbecues and fireworks. Just last year, when the legislature doubled the gasoline tax, an incredibly regressive tax, they did so as part of a last-minute negotiation cobbled together in the waning hours of the legislative session to give us now the third highest gasoline tax in the nation. And that also increased your vehicle registration fee. And just earlier this year, the legislature passed an unbalanced budget, the largest budget in state history, that didn't include any cuts and that pinned its hope on a federal bailout. This is how our politicians have treated us in the past.
Jake, any response before we move to Bernie's next question?
Oh, absolutely. Unfortunately, Andrew seems to have skipped over a period of time there where the tax rates were cut by our former governor, Bruce Rauner, and the state almost completely imploded after a several-year-long budget impasse. I mean, you saw services cut absolutely to the bone. You saw breast cancer screening services cut. You saw state universities about to go out of business, potentially shut down. That was the plan from folks on the right to fix the state, and it failed spectacularly. But again, I think we started out this conversation talking about protecting retirement income, which is absolutely something that proponents of this measure share an interest in and want to do. And that's why we've put the fair tax forward. And we've ended this conversation talking about all types of other things that have nothing to do with this amendment. They have nothing to do with the fair tax, and they have nothing to do with the sweet deal that the wealthiest are getting. So unfortunately, instead of talking about the issue, we have diverted into more scare tactics, more doom and gloom. And I think we are better off talking about how to make our tax system more fair, especially for working people, as opposed to getting sidetracked on these other issues.
And I'd simply say,
we want to make sure we get all of our questions in, and so I'm going to ask Bernie to step in with another question here. We'll have a chance to circle back around to these, though.
Yeah, I'm gonna lead this one to Jake first, just because it has to do with something you've been saying. Obviously, Andrew, you'll be able to respond as well. For months, Governor Pritzker and other supporters have described this amendment as leading to the same or lower tax rates for 97% of taxpayers. But some of the 97% are in the $100,001 to $250,000 range. Bracket under the law that the legislature has passed. The rate there would be 4.95%. That's the current rate. So Jake, you have also said here 97%, and the new ads on TV say 97% will get a tax cut. Is that an inaccurate message?
No, this has
at the same rate.
That's a great question. This has to do with the way that a graduated tax system operates. So currently, we have a flat tax system where everybody pays the same rate. With a graduated tax system, you have tiers of tax rates that are applied to different levels of income. So as you mentioned, for the first $100,000, that tier of income is much lower. For the $100,001, that's where the higher rate applies. Same goes for $250,000 and first dollar, the higher rate applies from there, and so on and so forth. So if you go and the state has put up a calculator where you can plug in how much you make and you'll find out how much you'll save if you make less than $250,000 a year. For folks who are making above $100,000 a year, they will get a tax cut. 97% of Illinoisans will receive a tax cut under this plan. And I can understand why this is confusing and why it's difficult. We are not used to a graduated system here in Illinois, but where we are used to it is the federal government. The federal government has had a graduated system for many, many years. And this is a system where marginal tax rates are applied to those different income brackets. And that's frankly just a more fair way of doing it. It's something that we're all used to when we pay our federal taxes, and it's something that a majority of states do here as well. So we would simply be joining the mainstream by adopting fair tax reform.
Andrew?
Well, a couple of things there that I'd be glad to touch on. First off, the conversation over these initial introductory rates, and they're themselves bad, even if you like a graduated income tax. One columnist noted that these rates are, quote, particularly ungenerous to the poorest Illinoisans. A majority of states with a graduated income tax have a bottom rate of 2% or 2% or less. And yet the governor wishes to tax your very first dollar at a mere 1/5% less than we currently pay. And one academic proponent of progressive taxation raised concerns about the governor's rate schedule, saying it was, quote, severely flawed and would have serious negative consequences. So it's bad at the bottom. What about the middle class? Well, during the Depression, somebody once asked the bank robber Willie Sutton why he robs banks. And he famously replied, well, because that's where the money's at. In Illinois, over 80% of us earn less than $100,000. There's twice as much income reported by filers who earn less than $250,000 a year than there is reported by filers who earn more than $250,000 a year. And then at the top, this would give us the second highest corporate income tax rate in the nation, and one of the highest top marginal rates on so-called pass-through entities, AKA most small businesses. And in fact, we're not operating in a vacuum as a state. People and businesses have options. And just next door to us, Indiana has cut their corporate income tax rate to 5.5%, half of what our corporate income tax rate would be under this proposal. And the federal income tax was mentioned. Well, when the 16th Amendment to the United States Constitution was first ratified in 1913, Congress implemented 7 federal income tax brackets ranging from 1% to 7%. And by the time President John F. Kennedy called for tax reduction in his 1963 State of the Union address, the top marginal rate was 91%. And so, yes, the federal government, 32 states and the District of Columbia use a graduated income tax, but we're not just any state, we're Illinois. But we can also look at our neighbors. Michigan has a flat tax. Indiana has a flat tax. Kentucky has a flat tax. Missouri's tax is effectively flat because the top rate kicks in at $8,500. So we're not out of line with our neighbors. And a few years ago, we forfeited the title of 5th most populous state to the Commonwealth of Pennsylvania because we keep hemorrhaging people. So what about those 5 states larger than us, our peers by population? Well, 2 of them have no income tax, and Pennsylvania itself has a flat tax. And so having a flat tax does not put us out of line with our peers by population or by our neighbors.
I want to continue on with this. We just want to remind everyone you're listening to live coverage of a virtual forum on the proposed amendment for a graduated income tax in Illinois here on WMAY on 92.7, 94.7, and 970 AM in partnership with the State Journal Register. Our participants are Jake Lewis with Vote Yes for the Fair Tax in support of the amendment, and in opposition, Andrew Nelms with the Coalition to Stop the Proposed Tax Hike Amendment. And to that question of rates, much has been made about the impact of this amendment on small businesses, family farms, and the like. As Andrew noted, most of us would be very happy to have a taxable income of $250,000 a year, but particularly for businesses and farms, it may not be that much of a margin there. So I'd like each of you to address what the impact would be on those entities, small businesses and family farms in particular, were this amendment to be adopted and those rates to take effect. Jake, I'd like to start with you, please.
Sure, I think it's a great question, and I think this is another area of misinformation and distortion. small businesses who file under the individual income tax, if they make less than $250,000 a year in profit, they will see a tax cut. If they make more than $250,000 a year in profit, they will pay a little bit more, again, just on those dollars above $250,000 each year, that $250,000 and first dollar. The Center for Tax and Budget Accountability took a look at all of the small businesses in the state that could be subject to the fair tax once it passes. And what they found is that, lo and behold, 97% of small businesses would receive a tax cut. Same goes for farmers. If you make less than $250,000 a year in profit, you will see a tax cut. We want our small businesses to thrive in this state, especially right now. And what they need, what they have told us they need, is a tax cut. And that is exactly what the fair tax will provide for them. Now, what you'll hear from the other side is 100,000 businesses are going to see their taxes increase. Remember, there are more than 1.2 million small businesses in this state. So they're not talking about the millions of other small businesses that are going to receive a tax cut. They're trying to scare and distort by simply referring to those who are doing quite well, who will pay just a little bit more on those higher incomes. So again, this is another one of these attacks that falls into the category of very, very wealthy special interests trying to distort from the fact that we need a more fair tax code, and that's exactly what fair tax reform would provide.
Andrew, your response.
I think many of the more than 100,000 small businesses who would be negatively affected by these initial introductory rates would be very surprised to hear that that they're wealthy. In fact, I think that many of them are struggling to make payroll. As a state, we lag.
Not if they're making $250,000 in profit.
May I continue?
Please.
Thank you, Jake. We lagged the nation in our recovery from the Great Recession, and will likely lag the nation once again in our recovery from the pandemic and the fallout caused by the subsequent shutdown of the economy. And even Barack Obama mentioned that it was a bad idea to raise taxes during a recession. And I think that it's important to look to other places where this has happened. And in California in 2012, voters passed a proposition, Prop 30, that similarly to here did raise taxes on people making more than $250,000 a year. And what they saw in the aftermath was outward migration and taxpayer behavioral responses that eliminated nearly half of the expected revenue gains from the tax hike on higher earners. And that's from the Wall Street Journal. And again, there is an impact of tax policy on business decisions. No less than Keynesian economist and Nobel laureate Paul Krugman, in his economics textbook, talks about tax competition and how state and local governments that impose higher taxes on people will face the prospect that people may move to other locations where taxes are lower. As I mentioned, we do not live in a vacuum. There is competition between states. And just last week, the Nonpartisan Tax Foundation cautioned that this proposal would give Illinois one of the most uncompetitive business climates in the nation. And again, let's look at what our neighbors are doing. Indiana has cut taxes. Missouri set in motion a nearly 1% tax cut over several years. And this would give us one of the most uncompetitive business climates in the nation. And for a state that struggles to get ahead and recover, having a very uncompetitive business climate is not a good idea.
Well, I think I've got some good news for Andrew here if he's looking for a tax cut, which is that the fair tax will cut taxes for 97% of Illinoisans, and it will also cut taxes for 97% of small businesses. So if you are looking for a tax cut for individuals or small businesses, you should vote yes on the fair tax. And I also think it's interesting, you brought up a few times different states in the US and in the region and their tax systems. I think it's important to look at the most prosperous, best run state in the Midwest right now, which is Minnesota. Minnesota was running deficits and it was seeing out migration as well a few years ago. And what did they do? They raised the minimum wage. They provided equal pay for men and for women under the law. And they raised the tax rate on millionaires. And what they saw was not this fleeing of people to other states, but actually an influx of wealthy people to the state. And the answer of why that happened is really quite simple. When the state has the revenue to invest in its infrastructure, when the state has the revenue to invest in its higher education system, when the state has the revenue to invest in its social service network, that produces high quality, successful workers. And that's where businesses want to go. They want to go to a place where they know that the talent pool is rich, where they know they can depend on the state government. And if we pass the fair tax, we can finally get out of this cycle of debt and deficit and on the road to stability. And that's what businesses are looking for.
Businesses are looking for predictability and certainty. And to the oft-cited red herring of Minnesota, well, they did well during great economic times when everybody was doing well. Rising tide lifts all boats. Another wonderful example is North Carolina, who in 2014 scrapped their graduated income tax and switched to a flat tax. Their economy boomed. Their unemployment rate was cut nearly in half. And so I would suggest that there are other places to look for better tax policy. And again, we want to make Illinois a better place to live and work and raise a family. And that means addressing those concerns raised by Moody's in their report. Instead of making our business climate less competitive, we ought to be making it more competitive.
Let's go back, please, to, if we could, to Bernie Schoenburg. We want to make sure we get as many questions in as possible. So Bernie Schoenburg with the State Journal Register for our next question.
Okay, and I'll direct this one to Andrew first. The graduated tax is supposed to bring in over $3 billion from those making over $250,000 annually. Apparently much needed to close and balance the state, come close to balancing the state budget, especially with unplanned COVID expenses. And by the way, I should mention this question is from Lee Milner, who is a reader and listener and also a known person around this. If this fails, can legislators find ways to cut that much, or will taxes need to be raised on everyone to fund programs?
Well, hello, Lee. Thanks very much for the question. Any friend of Bernie's is a friend of mine. No, look, as a firm believer in our free enterprise system, I think it's important to highlight that there are, of course, two ways to increase revenue. You can either raise tax rates, as has been done in the past, and as the proponents of this amendment wish to do today, or you can expand the total amount of taxable income, because under a flat tax, which is also known as a proportional tax, where everybody pays the same proportion of their income, meaning if Bernie makes more than I do, Bernie pays more than I do. But under a flat tax, the larger the pie gets, the greater the taxes are that are paid on that larger pie. And so Illinois has to grow its economy in order to attract people, to attract businesses, so that there's more wealth in the state. And then under a flat tax, that revenue would increase. And of course, we just passed, as I mentioned, the largest budget in state history. The governor himself acknowledged that the budget, that the legislature didn't cut. I think his quote was, "They didn't cut as much as I think they could have." And so there's no urgency. There's always an urgency to raise taxes, but there's never a sense of urgency to do much else. And policymakers have shown little interest in economizing. And so raising taxes ought to be the last resort.
Well, I think that in listening to Andrew speak, I'm reminded strongly of campaign commercials I used to see for our former governor, Bruce Rauner, who back in 2014 told us if we would only cut taxes, we could simply grow our way out of this problem. And what happened? Well, we cut the taxes and the state nearly imploded. Like I said before, you had state universities that were on the brink of insolvency. You had women's health services that were down a huge amount. You saw 30,000 children lose childcare. This is what happens. This is what happened, when we followed the libertarian idea that if you simply cut taxes for everybody, you can magically grow your way out of this problem. The reality of the situation is that this state has cut to the bone over the last 20 years. I mean, if you look at spending compared to the year 2000, things like higher education, we are down significantly. And it shows. We are not able to keep our state services funded in the way that we need to. We're not able to keep our higher education system funded in the way that we need to. And what does that lead to? It leads to high school seniors going somewhere else for college. It leads to people leaving the state because they can't get the basic services that they need to survive and to thrive. We have heard this time and again from the far right, which is simply, if you just cut taxes, we can grow our way out of this problem. We tried it here in Illinois and it failed miserably. Let's finally do what most other states do, what the federal government does. Let's ask the very wealthy in the state, the ones who make more than $250,000, mostly millionaires and billionaires, to just pay a few pennies more on the dollar above $250,000 a year. And let's take that money, it's more than $3 billion, and let's put it into our education system. Let's put it into our social service network. Let's put it into our infrastructure. Let's rebuild this state stronger and better for the long term.
I would say to the point about education, last year, the Metropolitan Planning Council issued a report that highlighted that here in Illinois, we spend twice the national average on K-12 administrative expenses. And if we spent just the national average on administrative expenses rather than double the national average, Illinois would have an additional $645 million a year to go towards K-12 education. And so the fact that we have the most units of government of any state in the nation who are the ones exclusively levying our highest in the nation property taxes, that's one of the reasons why the former head of the Better Government Association opposes this. He wrote in an op-ed that we should instead be, quote, attacking bureaucratic bloat and ethics reform. And I don't think that there's many Illinoisans who would disagree with that.
Well, I think Andrew brings up an interesting point, and I think he should go and talk to the school districts around the state about how they employ people. But here we're talking about the state and the state income tax. And the fact of the matter is, not only did Andrew not refute anything that I said about Bruce Rauner and his absolutely cataclysmic cuts to this state that he inflicted on us for 4 years, but he's not dealing with the reality of the situation when it comes to the way that we fund education, which is that for many, many years, the state has fallen woefully short in paying its share of education expenses. And what happens when the state doesn't kick in its share? Local municipalities have to pick up the slack. And that's why our property taxes are so high in this state. Nobody is denying that that is a problem. What happens when we have $3 billion that we can start to invest in education? That takes the burden off of local governments, off of local school districts to provide that funding, and that eases pressure on property taxes. This is the kind of long-term reform that we have been desperate for in this state to start and set things right.
I want to go to another question submitted by a listener and reader, John Hagman of Springfield, and speaking for a number of people with a refrain we hear frequently here at the radio station, expressing their concern that we are addressing this issue but haven't touched pension reform, for example. He also questions why we could get this amendment on the ballot but not one for term limits, which is popular with some people. And it comes down in a broader question to one of trust. Andrew raised the issue earlier. Why should anyone trust the state with this additional revenue when we don't seem to have done much to address some of these other issues, whether it's spending, pension reform, and the like? Jake?
I think that's a great question. Look, there are a number of other items that people have tried to push for in the state for a long time. They have not made it onto the ballot for a very simple reason, which is that most people do not agree with them. If you remember, Governor Pritzker, when he was running for office, made the fair tax the centerpiece of his campaign, and he won on that, and he won big. The reason the fair tax is on the ballot this November is because it is overwhelmingly popular, and that's the reason it's going to pass. These other issues that you mentioned, they have nothing to do with our unfair tax system. They have nothing to do with fixing our state for the long term, and they're simply diversions. Now, I do want to address
pension reform has nothing to do with fixing our state in the long term?
It's interesting. The same people who seem to be interested in scaring folks with the idea of a retirement tax are also the ones who are quite interested, frankly, in cutting retirements for teachers and firefighters and public service workers. So the key here is the state tax system is unfair. I don't think that's anything that anybody has disputed here. The fair tax would provide long-lasting reform to start and set things right. And I do want to address this trust issue because this is clearly the centerpiece of the opposition's campaign. They cannot debate the fair tax on the merits, so they simply try and talk about trust. You can't trust Springfield, et cetera, et cetera. Look, democracy is not a spectator sport. You, as a resident of the state, you need to hold your legislators accountable. And that means making sure that they live up to their promises. And if they don't, kick them out of office. There is nothing wrong with voting down somebody who is not doing what you ask them to do. But what the fair tax doesn't do is eliminate the General Assembly for the long term. So we need all the residents of the state not to worry about trust. Let's worry about accountability. Let's worry about holding legislators to their word. And if we all do that, this will be a stronger state for many years to come.
Andrew Nelms, your response.
I'm not quite sure what polls Jake is looking at, but things like term limits and redistricting are incredibly popular, and hundreds of thousands, more than 500,000 Illinoisans signed their name to petitions to place those questions on the ballot before Speaker Madigan's attorneys had them knocked off. Now, of course, our state's pension problems have been decades in the making, and there are no easy solutions, and there is no silver bullet. But what there has to be is an incentive and a sense of goodwill by all parties involved to want to solve the problem. Now, the proponents of this amendment have a very simple solution: yet another tax hike and a federal bailout. And we've had 2 massive state income tax hikes over the last decade. We as Illinoisans have never paid as much in state income tax than we do today. And this amendment, under the initial introductory rates, people would only receive a couple of dozen bucks off of their state income tax right out of the gate. And that's just where we'd start. Again, proponents have questioned whether or not the $3.4 billion in new revenue is realistic now in a post-COVID world. And I think a lot of people have questions about whether or not $3.5 billion is actually what people want because of campaign promises that have been made and legislative proposals that have been submitted. We have our unpaid bills and of course the pension liability. Now all of a sudden, what if lawmakers want $10 billion? And then those rates on middle income families that would be necessary to generate that type of revenue would be approaching double digits. I mean, they'd be confiscatory. And this is one of the concerns that the Civic Committee highlighted when they urged a no vote. They said, quote, "The graduated income tax amendment, if passed, all but promises that Illinois will not address its long-term financial challenges. The graduated income tax amendment does not provide a real solution to the state's financial issues."
Well, the Civic Committee was also out last year calling for taxing retirement income and raising income taxes on everybody and taxing and increasing the sales tax. So I'm not sure the very wealthy, frankly, members of the Civic Committee are exactly the type of voices that we should be listening to in this case. But again, I think that we need to focus on the core message here, which is that our state's tax system is unfair. Andrew has said a number of times here that he is interested in cutting taxes. Well, again, 97% of people, anybody who makes $250,000 or less, will see a tax cut under this plan. And he keeps, I understand the idea to sort of spin the quote unquote introductory rates. These are simply tax rates. I mean, the state of Illinois and the General Assembly sets tax rates, just like the federal government, just like most of the other states in this country. And it is up to us as citizens of Illinois to hold them accountable. So I and the members of the Vote Yes for Fair Tax Coalition look forward to holding these legislators and the governor accountable to their promises. But the fact of the matter is, instead of the scare tactics and the opens the door and it could happen in the future, let's talk about what fair tax reform would do. And that's cut taxes for the vast majority of Illinois residents.
And reality isn't a scare tactic, unfortunately.
I will go to Andrew now. When the General Assembly voted to put this on the ballot and also pass tax rates, nobody had ever heard of COVID-19. I would like each of you to say, how does the fact that we are now in a pandemic that continues, does it bolster your argument for your side? Andrew?
Gosh, I don't know. I've never thought about the pandemic, whether it bolsters our argument or not. But again, one of the things that is of concern to us is the fact that proponents have said that these tax rates in a post-COVID world will not generate the 3.4 billion that the proponents want. And so if the number is short of that, is there going to be an appetite for even higher taxes? And so, I'm not using scare tactics. I'm not asking people to believe in something that's outside the realm of possibility. I'm asking people to reflect back on how our politicians have treated us as taxpayers in the past and think about whether or not they'd continue to treat us in that same manner if they're given more tax power.
Jake.
Well, the fair tax reform on the ballot this form is not a referendum on whether or not you like Springfield. This is a referendum on whether or not you want to cut taxes for working people. And my personal belief is this COVID-19 pandemic has been absolutely devastating to the health and safety and livelihoods of millions of Americans and many, many people here in Illinois. Illinoisans are hurting. I mean, I think you've seen that over the course of this pandemic, and that hurt continues today. And what we need to do is provide them with relief. And that's exactly what the fair tax would end up doing. I mean, we're talking about tax cuts for working people. And I understand if the very wealthy people of the Civic Committee or the Koch brothers or Ken Griffin don't understand what it means to have a tax cut and to put more money into your pocket, but working people understand it. Working people understand having more money so that they can pay their bills, or they can pay for a sudden breakdown of their car, or they can pay for an unexpected expense that comes up. These people, the people who put on their boots every day and go to work, the people who earn a living by doing a decent day's work for a decent day's wage, they need help. And the fair tax would give them a tax cut. And that is something that I think, again, 97% of Illinoisans would enjoy, and something that we really need to do for people, especially right now.
Jake, I want to put this next question. Oh, go ahead, please, Andrew. Yes, go ahead.
There aren't many car repairs that cost $20. And that's what many people would actually save under this plan, under the initial rates.
Again, I understand that, the Koch brothers and the Civic Committee and Ken Griffin don't understand what it means to have more money in your pocket. And I'm not interested in debating that. What I am interested in talking about are the facts of the matter, which is this is a tax cut for 97% of Illinoisans, everyone who makes $250,000 or less.
Well, let's talk about some of the money aspect.
It's also
of
a tax cut.
Go ahead, please. Andrew, you want to make that last statement?
Yes, it's only a tax cut when compared to the current rate. And keep in mind that absolutely nobody would be paying less than we were all paying just a few years ago, meaning that politicians had to raise your taxes in order to pretend to lower them.
Look, I don't know about you, Andrew. I do not want to go back to the days of Bruce Rauner. I do not want to go back to the days of devastating budget cuts. I do not want to go back to the days of budget impasses. It's time for structural reform in this state. It's time to make a big change to the way that we have done things, a constitutional amendment to finally set things right and to join most other states in the federal government is exactly the kind of change that we need to put this state on a stable path for the long term.
I do want to move to one other issue here. Jake, you noted earlier that Governor J.B. Pritzker ran on this issue back in 2018. He's also devoted a sizable amount of money to the effort to get this passed, whereas other very wealthy Illinoisans have also poured in a sizable amount of their own personal fortunes in opposition to this amendment. So I'd like you each to address why so much cash from very wealthy people is being expended on this issue and what should voters take away from that. Jake, can we start with you, please?
Absolutely. The fair tax reform is something that advocates have been working on for a decade plus in this state. And Bernie remembers that there have been rallies at the Capitol back in 2011. I mean, this is a 50-year problem that people have been working on to fix. As I mentioned before, Governor Pritzker ran on this. In the 2018 election, he was overwhelmingly elected on this promise, and he intends to get it done. And he's put resources behind that. Let's be clear about this. J.B. Pritzker has put money in to raise his own taxes because he knows that this is a more fair way to tax the residents of the state of Illinois, and it will provide desperately needed resources to strengthen our state for the long term. Now, the flip side of the coin is it's not real hard to understand why billionaires like Ken Griffin have put money in. It's not very difficult to understand why a representative of the Koch brothers is here with us tonight. The answer is they want to keep their own sweet deal. They know that they're paying less in state and local taxes than working people, and they will do whatever they can to try and keep that deal in the long term. So instead of talking about a tax cut for working people, we talk about all of these other issues that frankly have nothing to do with the amendment. So I think it's pretty clear why you've seen the money on the different sides when it comes to this amendment. But at the end of the day, this isn't about TV commercials and mail and slick ads. This is about people talking to their neighbors and their friends and their colleagues and their family about what's best for us. Is it best for us to get a tax cut and to start to set things right for this state? Or should we keep the same broken, unfair system that has failed us for 50 years?
Andrew, your response, please.
Well, I'm sorry that Jake has devolved the conversation into personal attacks on me and other people. I certainly won't say anything about the governor and his tax situation, whether it's income taxes or property taxes. But there are certainly many powerful special interests that want more tax power. And that should be very concerning to us all, because once the Constitution allows for the legislature to implement any tax on income it sees fit, that's a very troublesome place to be. And it's very appealing to have rates that give a family of four earning $61,000 ostensibly a $41 cut in their income taxes initially. But the appetite for more money in Springfield is insatiable. I don't know that anybody can guarantee or has guaranteed, although I see some of the Vote Yes commercials talk about property tax relief, I'm not quite sure how that's possible, given, again, the fact that estimates, the revenue estimates are questionable. They were questionable before. They certainly are questionable now. And even proponents of the amendment have suggested that the state would need $7 or $8 billion in new revenue in order to provide property tax relief. And so the appetite for more money isn't going to end here.
Well, I've certainly enjoyed discussing this topic with you, Andrew, and I think that we have put the two sides of the coin very clearly here. I completely understand why wealthy special interests have poured so much money into trying to keep their own sweet deal. And I completely understand why, instead of talking about the facts of the Fair Tax Amendment, we're talking about hypotheticals about the future and different things to try and scare and distract from the conversation. But at the end of the day, whether it's an ad you see on TV or something you read on Facebook or something someone says who knocks on the door, the facts just don't change. 97% of people will receive a tax cut. Anybody who makes $250,000 or less, $3 billion plus to strengthen our state for the long term, and structural reform to get the state back on track. Those are the facts of the situation.
If I could interrupt, please. I'm sorry, because we're very tight on time. I want to give Andrew one last chance to respond to that very briefly. Then we have to get to our closing statements.
A tax hike isn't structural reform.
And with that, that does bring us to the point of our closing statements. I want to thank both of our participants for being here this evening. And again, you'll each have 2 minutes to make your final comments. So again, in support of the amendment, Jake Lewis with Vote Yes for the Fair Tax. And Jake, please go ahead. 2 minutes, please.
Well, again, I want to thank the State Journal Register. I want to thank WMAY for having me here today. I also want to thank Andrew for his viewpoint on the issue. Voters in this state have seen and suffered through problems from state government for many years. I don't think it's a secret that our state has struggled. And I think that up until very recently, we have been caught in a cycle of crisis and gridlock and standoff. What's clear to me, and I think what's clear to most people in this state, is that we need to make big structural changes to the way that we do business. And absolutely nothing could be bigger than changing the way that we tax income. We need to join the majority of other states and the federal government in instituting a fair tax system. And in this state, that means a tax cut for anybody making $250,000 or less. So you're going to see a lot of TV ads about this. You're going to see a lot of mail pieces about it. Ask yourself, is the tax system in this state broken? Do we need to fix things for the long term? And if you make less than $250,000 a year, do you want a little bit more money in your pocket? And if you answer those questions yes, then please join me and join the hundreds of other organizations and the millions of people around this state in approving fair tax reform this November. Thank you.
Jake, thank you. And now for a 2-minute closing statement for the opposition, Andrew Nelms with the Coalition to Stop the Proposed Tax Hike Amendment.
Thank you. As the editorial board of the Belleville News Democrat put it while this issue was being debated in the legislature, quote, "Why in the world would state lawmakers be talking about a progressive tax if it were not a path to more of your money?" And I would encourage Illinois voters to really view this as an opportunity. We as voters are empowered to decide the fate of this tax hike. Unlike all the other tax hikes in the past, this one won't happen unless we allow it. And this is a bad deal for middle-class families, and there's absolutely nothing fair about giving Springfield politicians more tax power. And again, I think it's very important to think about this in the context of current events. FBI agents have raided the Illinois Capitol building. Lawmakers have worn wires to record themselves offering bribes to their fellow lawmakers. Multiple lawmakers have resigned in disgrace and pled guilty to corruption charges in federal court. In fact, the most recent lawmaker to exit office under charges of federal felony income tax fraud, which triggered his resignation from the Legislative Ethics Commission. These are the people who are asking for more tax power. This is a bad deal for middle-class families, and there's absolutely nothing fair about giving Springfield politicians more tax power.
Gentlemen, I'd like to thank you both for a very informative and cordial discussion this evening. To my partner, Bernard Schoenburg from the State Journal Register, thank you as well. And we do appreciate the support and involvement of the State Journal Register in partnership with us here this evening. You can still review the full broadcast this evening. It'll be available on demand at WMAY.com, also at the State Journal Register's Facebook page and other social media outlets. And we encourage you to share that with your friends so that everyone has full information before you cast your ballot. And of course, Election Day coming up on November 3rd, but voting is already underway around the state. For our participants, Jake Lewis with Vote Yes for Fair Tax and Andrew Nelms with the Coalition to Stop the Proposed Tax Hike Amendment. Again, thank you both for being here. Thanks to all of our listeners and viewers this evening for taking part in this forum. And on behalf of the State Journal Register, I'm Jim Leach for WMAY. Have a great evening.
Thank you.